I think the most common question is probably, where's the market going? Is the market going to go up? And honestly, as you study the market and you look back at, like, Freddie Mac has a great website that tells you the mortgage rates. So if you can go to Freddie Mac, you can look at mortgage rates. It tells you a history for the last however many years.
Yeah, Freddie Mac PMMS.
Yeah. And if you follow that interest rate graph, it'll tell you exactly what the market's going to do. So, right, when rates go up, the market slows down. When rates go down, the market picks up.
So our inventory, it's always about supply and demand. I mean, I hate to go back to elementary school, economics.
Econ 101.
Yeah, but our supply is still at a low enough level. When rates do drop again, because they will drop again, you will see the market pick back up. Now, if we were twice the inventory, then you'd really have to see a drastic drop in the rates, and you wouldn't see an immediate response to it. So you've got to look at our current interest rates, which I think we're above 6, so we're at 6.5.
It's between 6.3 and 6.4.
Yeah, so we'll just go
yesterday when I looked anyway.
So let's just say 6.5, just so it's easy, math, or just easier to say. But at 6.5% interest rate, you're still seeing multiple offers on houses. You're still seeing
the nice ones, yeah.
Yeah, the nice ones are still selling quickly. I mean, I just put one over $1 million. We were gone in a week. You've had the same thing with some of your nice ones where they're turnkey, ready to go. No matter what the interest rate, the nice ones are going to sell super, super fast. So despite what's going on with all the interest rate stuff, the other thing people have to remember is that there's now more mortgages in the higher 6% and up than there is left of the 3%.
Yeah.
So a lot of the people who had those 3% have moved on because life goes on. People have kids. People unfortunately pass away. Divorce.
Job transfers.
Yeah, all that stuff. Upsize, downsize. Life goes on. All that stuff happens. And so those 3% rates are basically, they're becoming a dinosaur already, which is kind of funny to say because it's still recent in our minds. And I think that real estate agents are actually probably, especially the ones who've been around for a few years, they're actually their own worst enemy when it comes to interest rate conversation because they're probably sitting on a 3% rate. And because they don't want to get rid of it, they think everybody else thinks the same way they do. And it's like, no, if you were a buyer, in this market, you just got to deal with what you got to deal with. I go back to, and I've said this before, everybody has a family member who will, the second you talk about interest rates, they're going to go, well, back in my day, I had a 17% interest rate. Well, guess what that means? If they had a 17% interest rate, guess what that means? That means they bought a house.
Yeah.
Life goes on. Transactions happen. So my prediction, if we're talking about it, is I think is where we're at interest rate wise, as long as we don't see rates shoot up any higher, we're always going to be sitting on this cusp of the market switching on a dime and going back into
seasonal patterns.
Seasonal patterns. I mean, right now we typically would start to see our inventory be declining, but right now it's sitting steady. But we saw that last year. We saw that the year before.
Real estate's been so weird the last couple of years. I mean, it's been so different. I mean,
and yet year over year, it's still appreciating.
Yeah. So
my prediction is that we're just but it's not appreciating like crazy. I mean, normal appreciation is anywhere between 3 and 5%.
I mean, historically, I think 5 to 6% is pretty normal.
So we're sitting at like 1 to 2% interest rate, or increases, and I think we'll see that for a couple more years until some of the stuff just.
Yeah. So
we also have a new person coming in to replace Powell, so I don't know what their philosophy is going to be either. So,
yeah, I think though, like when you look at, when you talk about predictions, we have some data to kind of show. Like we dropped to 5.99%.
And the market started going
started going a little bit crazy, right? But it only lasted for a minute because then the Iran conflict started and it jumped up to 6.7, 6.6.
Yeah.
So I feel like if we can get that rate right below 6 or right around 6, it really starts to pick up. And as you see that pick up, you'll start seeing a lot of those 2 and 3% interest rate holders. At that point, they really start to come on the market more. So initially, you'll see an increase in supply.
I think people feel okay with a 5 in their interest rate.
Yeah.
They just don't like having a 6 in it.
Yep. Yeah.